Yo, welcome back to the Mo Diesel channel. All right, if you're here, then you're here to make some money with me, right? I'm going to teach you a thing or two. You feel me? So you guys just sit back and relax, and I'm going to teach you guys my method of trading and how I catch my moves. Basically, today's hold on. So yeah, basically today's video is about mitigation. I think mitigation is like probably one of the best ways that I catch my moves, period. Like how I catch those sniper entries, y'all. For real. So let's get into it, okay? I hope that my little fan ain't too loud. It's a little hot over here. So, but anyways, let me get into it. I don't know why my headphones are on. I don't even need those, right? They're just making me hot. All right, guys, so let's get into it, right? I'm going to try to simplify this as much as I can. So if you guys just stick with me, I think that I will be providing you with information that will take your trading to a whole nother level. So I just need for you guys to pay attention, come back and watch these videos as many times as it takes for you to understand my theory and how I get these entries. All right, because I'm going to let you know right now that I don't trade like everybody else. Right? I don't trade like a lot of these people on YouTube that be talking about support, resistance, and supply demand levels, which, you know, I mean, if that's what you understand, then fine, you know, trade it. I get it, but I don't trade it, and those levels never really hold up. So, and I'm going to explain why. So let me go through what it is that my way of trading. And I never really got a chance to come onto YouTube and discuss this. So I'm glad that I'm now freed up a lot of time and space to be able to sit still and give out the information, you know, the right information to our trading community. I feel like I owe it to the trading community for, you know, I owe it to them basically to give back. I think that once you learn this skill, it's something that you do want to like try to pass on, and, you know, each one teach one. So don't just be all stingy. You learn this, you learn the way that I trade. You know, if it can help the next man, teach the next man. All right, don't be stingy with this shit, man. Come on. All right, so I'm hoping that you guys can get what it is that I'm getting ready to do. I'm going to run through it so fast because I really don't know how to slow it down. So just bear with me. I'm going to talk you guys through it, right? So this isn't a video for you know, beginners. I'm going to be saying terms that, you know, you would need to know what these terms mean. Now I'm gonna go into a little depth on the term that I'm teaching a class on today. So just like I said, again, bear with me. So let's start. Like overall, you guys, I believe that market has these trends, of course, everybody knows. So I always start when I do my analysis on like before market opens. I take everything off my chart, I make it completely naked, and I start from there, because every week is a different, it's something different, right? You're going to see something different every week, right? So I like to still see where we stand on the monthly. So I'm seeing right now, and I'm just going to run through this, you guys, like really just bear with me. um, because I never really explained in like my way of my psychology behind trading. I just do it. And sometimes it'd be hard for me to explain what it is that I'm doing. And I just want to come on here and do and explain that to you guys. So that way I can, I don't know, maybe become better at explaining it, and find different ways to say it and to break it down to you. So this way that you will get it. All right. Because once you get this, I promise you, you guys, you're gonna, like, your trading is going to elevate and it's going to change forever drastically. And you can do this forever. I promise you, on any chart. Doesn't matter, every chart. I'll run through a few charts and show you blank charts. All right, so again, here I am, just looking, checking out the monthly. So I'm seeing that one, you know, monthly did come up into this level and took out, you know, just grazed it a little bit. But this was, to me, a liquidity grab. All right. And why is that? Because of, we're going to do this. I'm not going to put this one here. I'm going to do this one. All right. So we're going to do this arrow. And if you can see this arrow right here, it's pointing at this candle here that actually came up and took out these previous highs. So it took out the previous highs and it looked like it reversed. Most people would be looking for, you know, some, you know, the reversal pattern, which they would have got caught here, because they're assuming that, let's just make this bigger. I just want you to see. They're assuming that this doji candle is going to give them the next candle to reverse, but instead it came up. This candle didn't take any liquidity, so I wouldn't be looking for this candle to be the reason on why market gets really pushed down. Like, it did take liquidity over here and over here. Like, for instance, like, a liquidity grab is a liquidity grab, you guys. All right. These highs have stop losses. So if they have these stop losses here, right, market is coming up, you would expect market to, you know, fall after that, but it didn't. The next candle, monthly candle, pushed price up, right, went up and took out these highs. So we can go ahead and say that market did a liquidity grab, right? And as you can see, we're going to check the trend just to make sure everything is still trending in the up direction, right? So let's just drop down. So this is how I do it, guys, like how I'm finding my positions. And I'm just going to run through this real quick. It doesn't matter how you do this. You do it on any chart, it's going to work out the same. Like, not out the same, but it's like, if you keep up with the theory, then the theory is going to work every fucking time. Like, it's going to work, okay? Excuse my French, y'all. I'm going to, like, try to limit my my curse words, because I'm not sure who's watching this. So, okay, so this is what my eyes is seeing. All right, market took, I'm looking at here, and market took these guys here. So if they had stop losses here, they were taking stop losses there, they were taking. All right, cool. So where are we now? We're on a daily. In previous daily areas, to me, is just, this was a retracement. We're still trending to the upside, where we could still possibly get above this area here. So that would be We would name that we'll just put a text on it. We'll just say it's like the all-time high. All right. So we have the all-time high up here. So I'm getting ready to do something, and I'm going to show you guys why this is like the mitigation part of this is so important. And you must understand mitigation. Mitigation is key in these markets. Okay. So one thing I'm doing is I'm looking for on the daily. I'll start marking on the daily, but let me look at the weekly real quick. Let me just make sure. All right, so let's start at the weekly. Just real quick. We're going to narrow this down. So I don't know what's going on. I'm just going to just start marking just so I can get an idea of what's happening. I already know on the higher time frames we are trending up. Look at all these bullish candles here. So the buyers are in the market, right? So I'm seeing now that, all right, so it's a possibility of us, you know, on the weekly, you know, possibly going up some, or some people were looking at this candle right here as a doji candle, right? They're looking like, hey, this is a doji. It could be a possible reversal. Why? I would say it would be a possible reversal off a weekly structure. So let's see. I already marked this imbalance. So I'm looking at and looking for imbalances, y'all. So one of the most important things here is, you know, you're going to look for the trend. Find out what's going on with the trend. You cannot trade against the trend. You want to trade with the trend. I mean, you can trade against the trend if you want to. You're going to get some nice pip movements, but you know, long term, I'm talking about long term moves, y'all. Like, I don't care about the short term. I want the long term move. So that's basically how I'm trading. I'm looking for long term moves. So let me show you how I get it. So I'm basically now on the weekly, and I'm just marking insufficient price action. So let's take this away because we don't care about that, right? None of that matters just yet. We're going to mark here. All I'm doing now is just marking all insufficient price action, guys. So if you're not doing it this way, I mean, you might want to start. Because let me explain to you why. Because there are no accidents in these markets. The market makers they are just that, the market makers. They're making these markets, and they're making them purposely, okay? Purposely. So our job is to, as Forex traders, is to analyze these markets to find out when the big banks are in, or the big money institutional players are in the game, and where is the money, because they're going to target money every time. Every time they're going to target money. So our job is to find out where they are and what's going on, right? Because we want to get in the markets with them and against the retail traders. Okay. So this is my mindset the whole time. I see these down here, but these ain't making them ain't gonna make no noise. All right, we on the weekly. So let's go ahead and drop down now to the daily. So I'm gonna drop to this daily. All right. I'm gonna, again, from the daily, I'm gonna mark all insufficient price action. So bear with me. and you can call it whatever you want. Slippage. Some people call it uh, um, insufficient price action. Some people call it imbalance. I mean, to be honest, they're all the same. All right, because market is bouncing in between these areas. Market is bouncing from one imbalance to the other imbalance. Okay, this is how I view the markets. I see how they're bouncing in between, back and forth. Okay, so to me, it just makes sense. All right, so, and this is how I get my long-term trades, because I know that market is bouncing from one imbalance to the other imbalance. Okay, and that's the only thing that is this slippage candle. All right, these slippage candles, there's only one-sided play. You see all white, that's all buyers. You see all black right here, that's all sellers. Like, there has to be two sides of the market, or else, you know, it's insufficient. So the price action must be sufficient at all times. And listen, they'll leave a gap to come back to it later, but you better bet your butt that they're going to come back for those gaps. Okay, so our job is just to determine on when they're going to come back for those gaps. So now that I'm on a daily, I've marked most of my insufficient price action. I can mark some more. Like, I literally like to mark all my insufficient price action, guys. Like, for real. Oops. Okay. So my daily is done. Daily is done. All right. So now let's go to actually, you know what? I want to stay on daily real quick, because I want you guys to see something. Market was what? Trending up. So this is an uptrend. It got up here, and then it made a low. Then it made a higher high. Then it made a lower high. Okay, and then a higher high. So at this higher high right here, I mean, this was a higher low, I'm sorry. At this higher high right here, this is where my eye is paying attention, because to me, what pushed price up like this and then pulled away from it, right? Just literally snatched away from it. Like, what could do that, right? Only big banks can do that. So the reason they didn't continue up was because they were taking, they were grabbing liquidity here. And they were also placing sell orders at the same time. So this was your buy to sell candle. So this is your institutional candle right here. So I want to change the color for this. Let me make it purple. All right. So here is our institutional candle. And let me show you how you could have caught, you know, this reversal from the all-time high back in May. You know, you could have caught some nice pips off of that one. And I'm going to tell you why. Because, one, my eyes are paying attention to liquidity grabs look left. So this one was grabbed and this one was grabbed. What the rule of thumb is, they do liquidity grabs and they reverse. As you can see, this was that buy up to sell. So they did that buy to grab liquidity and then they turned around. Okay. So now what are they doing? Out of this candle, let's say you would have saw all of that happen. Right? You would have saw that happen. This candle right here. Push up and then come down. And they haven't been back since, right? Except for this area here. So we're going to examine that area and we're going to talk about the mitigation that's happening in this area right here. So I would like to go down to Let's do a 1 hour. Let's see. Let me see if I can see it on a 1 hour. Yeah. So really what I do is I go to the 1 hour, right? I'm watching market push up, right? I'm watching the market. Let me open this up for you. Sorry, guys. All right. So what I'm doing right here is this is the candle that like literally just went up and just made that all-time high, right? So if that was the candle that did it, right, this candle here, we already discovered on a higher time frame that this is the last push up candle before the move to the downside. And we can see that in the future that this is that candle, right? So, but let's say we didn't know what was going on. How will we catch our move? How will we know where market is going to mitigate out of? Well, you know, the mitigation is basically, you know, market makers that that got like a whole lot of money. They got buys and sells, you know, orders, that buy and sell orders, you know, they're placed in different places. So they are moving from those order blocks, moving away from them or targeting them, right? They'll bounce off of them. They'll target them and bounce off of them, you know what I'm saying, and move to the other direction, whichever direction that is, right? You would just have to be watching price action. So, okay, so right here on the hourly, we got this last candle here. Okay, so in this, let me go to the 4 hour real fast. Let me just double check that. Let me make sure I'm good. All right, cool. Yeah. So we got this candle. Perfect. I see that candle and I'm like, okay, something is happening in that candle to cause market to move the way it did. All right, they only going to let me go 15, right? But that's fine. All right, so now I'm looking for insufficient price action. Remember imbalances? So we got the push up, up, and then it snatched down. And then she came back up here. She went way up here and she came all the way down. I don't know what percentage this is. It's probably less than 50% of that candle, but let me put this here. All right, so this is what I'm seeing and what I'm looking for. I'm looking for insufficient price action and how market is going to move off of that insufficient price action. Right? So let's look at this insufficient price action here. Actually, yeah, this insufficient price action. So what I'm noticing is a few things, right? In order for market to move in another direction, it has to mitigate, which is basically, you know, pushing to orders and then turning around, buy and sell orders. So if we look at the 15-minute chart here, this candle here was the last push up to the downside. So if we wanted to narrow this down now to this area, that last candle, right? This candle here would be the candle that was the last buy to sell. So because that is the last buy to sell candle and it gave us insufficient price action, right? And it just has like serious momentum to the downside, right? This is good signs. So now I'm waiting now for market to come back into this order block, right? So I could take my shot. Now, my stop loss, I like to have my stop losses under 20. And I'm going to tell you why. Like somewhere 25, 20. Because this lets me know that I kind of got a precise shot. Like my precision is on point, right? So this last buy to sell candle, they're going to come back to it, which I knew they were going to come back to it, which they did, right? And they pushed into it. I know the 5 minute they're not going to let me get it, but that's fine. We'll just work with what we got, y'all. All right. I might have to look into their plans too. I ain't really been paying attention to none of that stuff. I be zeroed in to just market my charts. But anyways, so after I find my position on the 15 minute or the 5 minute, I'm basically I find my position, I spread this thing out, and then I go back to the 1 hour. Back to the 1 hour. Now I'm looking for, actually it'll be more on the 4 hour. So you could do 1 hour or 4 hour. It's up to you. I mean, 1 hour is probably going to be good enough, guys. It's going to be probably if you can't hold it out that long, then I would suggest just all right, just trade off the 1 hour, right? And then just aim for, now all you're doing is you're aiming for insufficient price actions on looking left, right? So now, you guys, we're on the 1 hour. We take that 15 minute position and we aim for insufficient price action, look left as we come down on the wave. So where's insufficient price action? Let's look. Boom. We hit one. Here's one insufficient price action, right? So you can look at that as, I'm going to get rid of this. I don't know what this is. Is this over there? Yeah, it is. It's way over here. All right. You can say, hey, this position here actually hit for 512 pips with a 25 pip drawdown. This is a 1 to 19 risk to reward ratio. This is how you're able to hold your trades, or I'm able to hold my trades, and you'll be able to hold your trades too. You hold your trades long term, so that way your patience will get paid for. The market pays you based off of your patience. Y'all trying to get rich too quick, you know what I mean? Trying to get in, get 10, 20, 30, 40, get 100 bands real quick, you feel me? But that's not trading, y'all. That's not trading, okay? So I mean, I could have caught here on this one, seeing this push up, last push up, wait on the second minute, wait on this to come up into this area, this institutional candle, and turn around, right? You could have caught that on the lower time frame. We already showed you on the 15 minute. We see this little gap thing here, right? This little gap on the lower time frame. We caught that. We caught that. All right. So on the 1 hour, all you're doing is aiming for insufficient price action, which would have been right here. And this one would have got 8. Boom. They tagged it a couple times. This is where I think a lot of people would have been like, when market would have been coming back up because of due to this insufficient price action, like how she came down so fast, right? I think a lot of people would have been scared to hold the trade, right? They would have been scared to hold the trade, but really didn't have no reason to, because market, as you can see, market never came back up to our position. Never. So this right here also would have helped you confirm that, hey, market is still pushing to the downside. Why? Because we had gaps as she was pushing down to get down into this area. We had gaps that were being made. We had insufficient price action that was being made. This is all slippage. This is, they're all the same terms. You know what I'm saying? Like, they mean the same thing. So just know that, okay, there was gaps, and then they're going to come back for that. So a lot of y'all want to sell here when you see this big black candle. Oh, market's selling. Don't do that. Don't do that. Just guys, you can catch another position higher. Look up. Is there insufficient price action above this insufficient price action? Most likely there is, which means that they're going to come back for it. 9 times out of 10, they come back and fill the insufficient price action, guys. Okay? I'm trying to help you guys with your trading. All right? Because I'm noticing like people are still, doing a lot of retail trader talk, So, I mean, I don't talk like that. I, use words such as imbalance, mitigation, you could do the whack off or whatever. Like, it's totally like up to you on how you want to see these markets. I'm just trying to show you how I do it. So I'm seeing insufficient price action, and I'm playing off of the insufficient price action, guys. Okay? Dang, my ringer out. Let me turn this ringer off. Sorry, guys. All right. So I'm aiming for insufficient price action, right? Before the insufficient price action, before there was a fall, there was a push up before they fell, right? So that push up happened here, like this whole little candle here, that white candle right there. This is a bullish candle that pushed up and then fell, and then it instantly had insufficient price action. My eyes look at stuff like that because I know that they are going to come back for that, which they did later on in the future. I always remember, hey, they're coming back for that later on in the future. Set a limit. So I'll set a limit right here and wait on market to get up in this area, and I'll look at the lower time frame. So now that I found out, okay, here's my order block, right? And then here's my insufficient price action, right? Here's the imbalance. I'm going to call it insufficient and imbalance, you guys. And they both the same thing. I just want to keep reminding you, all right? So, let's see. Where are we now? All right. So here at this insufficient price action, this insufficient price action, I'm waiting. I got my alert. I'm waiting now for market to get in that area, right? So let's say, let me go down here to the lower time frame. Market finally comes up into that area. It alerts me. All right. So now I'm dropping down to basically like maybe the 15-minute or the 5-minute, depending on what market gonna give me. They're not giving me much here, right? All right, so let's go and look what happened. All right, so they did get up into that area, and you could have taken that shot. So let's say you taken that shot. Most likely I would have, because they filled this gap as they came up over here, strong push up to the upside, and then tank following with insufficient price action to the downside, letting me know that, hey, they're quickly buying and then they're selling at the same time. So that's the way that market makers can get their positions. Hedge funds, the only way for them to trade is to put money into it and also, you know, to push market in a certain direction, and then put more money into it to push market in the opposite direction. That's the only way they can trade. So if this is the case and that's law, all right, cool. Let me go and see, look for just those big, large moves on the 15 minute. So here we are in this area. Market has now came up and it's hit my alert, right? So now I'm seeing like what's going on. Well, here's a big push up, right? And anywhere in that area, I mean, I probably would have took the sell straight up. And what time would it have been? I mean, 12:30, that's, you know, it's like lunchtime, like right after lunch or something like that. But I would have taken the short. I would have taken the short. I would have had, like I said, you know, like somewhere between 25, 35 pip, you know, pullback. This one probably would have got a little tap, but I probably would have had to narrow it down even more. Because see, right here, there was a last buy to sell. So that 15-minute order block right there would have been best. So I could have got a better shot here. And now, see, as long as I'm getting my my risk under, like somewhere under 30 pip, then I know that I can take that shot, you know. So I did that on the 15 minute. I found my position on the 15 minute, basing it off of that last buy to sell candle order block on the 15 minute right here, this white candle. Let me show you guys this one. Okay, so this one here, okay, this is the one. So now you're going to shoot off of that. All right, you're going to place your, you know, your sales. You can even sell off of, if you wanted to sell right off of that candle, like you could have sold literally like right here, boom, if you wanted to, just to bring it up some. Narrow down your stop. Look at that, I got my stop even down to 14, 15, 16 pip, right? So now I'm going to go to the 1 hour, and I'm going to look, okay, now I got a sale going. Where could my sale go from this area? It can go to insufficient price action. So they're moving from one price action to the other, right? And they mitigated. This area would be called a mitigation off of an order block to the look left. As you can see, there is a 1 hour order block with following imbalance, right? And following strong breaker structure here, right? That's 2. Then there's strong movement to the downside, big momentum. That's 3. That's enough to let me know that we are now in the sell territory, meaning that sellers are now in the market. This right here is a representation of sellers in the market. Now what we're doing is, and what I'm doing is, I'm just waiting for market to come back to this order block so I can mitigate. Markets are going to mitigate out of this area, right? They're going to mitigate. They're going to hit this area and reverse. Exactly what they did. Hit that area, reverse. So now I'm just trying to get my profit. So now I'm like, all right, how long can I hold this trade on the 1 hour? And how long, you know, before it hits this? Let's see, here's one insufficient price action here. So there's one here on the hourly, which got, as you can see, it got hit from up there. Boom, they hit that one. Then there was another one here, right? Boom, that one got hit. Look at that momentum to the downside, smashing this area, smashing that price easily. Then the other thing would have been for, look at all these bottom wicks, guys, bottom wicks. All of this here, double bottoms being, you know, down here. This is all, you know, liquidity areas, right? Like, you wouldn't even have to look that way. Just look left. Let's just stay looking left and just see what's going on. So we had this money here, double bottoms there, right? I mean, they were smashing these areas. Liquidity. Like, this is all money, y'all. All right. So then let's see. This is another 1 hour insufficient price action or slippage or imbalance, whichever one you want to call it. That one. All right. And then there was more down here. There's a big gap there. Oh yeah, and gaps. They call them gaps too. Some of y'all call them gaps. I mean, it's all the same thing as long as you know what the heck you're talking about, right? All right. So now I'm looking at, all right, more insufficient price action. Just that's all I'm looking for. Liquidity areas of insufficient price action. Right here. And I'm sorry if this video is like super long, but I'm telling you guys, if you just do this, mark insufficient price action areas and watch how market just bounces from one insufficient price action area to another. Now I do use insufficient price action as targets. They will hit that. They don't always bounce off. Okay. They will hit it and then they will smash through it. You know what I'm saying? Sometimes they'll feel it and keep going. That's why you got to keep in mind, you know, higher time frame price action. And I don't use indicators on my chart. This is exactly how I chart. I don't, you know, do the indicator thing. I used to when I used to not know how to freaking trade, but not to say that y'all that's using indicators don't know how to trade. It's just, it's not my cup of tea. All right. So let's just say, all right, dang. That's a lot, right? All right, let's stop it there. Now, what do we have going on from this top piece? How far did she go? She hit one target there, so we get rid of that. She hit a target there, get rid of that. She hit these, which turns it into liquidity grab, so they double bottoms taken, real nice, right? This imbalance got hit over here by this candle here. Then they kept pushing down and they got hit again, as you can see, by this candle here, right? And then we still had more imbalance, and they just kept eating it up, right? Down here, right? They took out this imbalance over here with this candle, and then they went up and then it came back down. They really smashed through that, right? These are just holding trades. I know a lot of you guys don't want to hold like long term like this, but yo, you can make heck money, man, just holding your trades instead of doing the short term thing. Like, yeah, market pulls back. Don't get scared of pullbacks. It happens. It needs to breathe. So yeah, just hold your horses. Sit on your hands sometimes, you guys. You guys would be such good traders if you could just sit on your hands and stop looking at the lower time frame, like playing off the 5 minute and 1 minute and moving off fast. But okay, so let me hurry this up. I've already made this video too long, but I do want you guys to just see like how I'm moving through these markets. So this actual trade here, like I said, we would have targeted the 1 hour insufficient price action over here. We would have target down here. This is that second position. So the first position, you literally could have taken that one to all of this insufficient price action down here, which, you know, taking out those lows. Same, taking out this low, taking out this low, right? I mean, at this point, you know, I don't think anybody is really holding their trade like for 10 days but me, right? I will hold the heck out of my trade, but you know, everybody's broker is different, and also going to depend on your swap fees, right? So definitely pay attention to that, right? Don't want you holding a trade and then your swap fees is taking up all your money. That's not good, right? So, I mean, but if you look at it, like, let's just say this trade here was done, let's say right here, right? This trade equaled out to being 1,218 pips. This is a 1 to 54, right? 1 to 54 risk to reward ratio. Like, come on, guys, with a 15 pip stop. You see that? A 15 pip stop, and I'm going to catch 1,218 pips, right? I'm going to catch that. So, like, understand that market is moving from one imbalance to the other, and they're mitigating off of order blocks. Okay, so if you don't know what an order block is, then I'm just going to have to do another video on order blocks and show you guys how to market mitigates off of those order blocks. Okay, so now as you can see what market is, let's just continue. You can see where market is. You would have caught some very nice pips here. Like, this would have been my target down here. This last one, which was the last push right here, that really brought my attention. Here's a last sell to buy with insufficient price action. Remember, this is all I'm looking for, guys. Last sell to buy or last buy to sell, insufficient price action. It's always the same thing. I'm never going to change it. And look what market does. Comes down into it, right? And reverse. Comes into insufficient price action and reverse. Mitigating out of that position. This is what they did. Here's your mitigation right here. Boom. This is your shot. Right up in, you see this quick push up, and then it came back down into it. Boom. Right? This area here. You could have took this, like, you didn't even really have to take that low. This is an hourly. We can narrow it down on a lower time frame. I just want to show you, like, how, even if you took 50% of this candle, I mean, it didn't matter. Like, if you just would have got in as this candle was moving down, I would have to look on a lower time frame to see. So let me check the 5 minute real quick. All right. See this quick, fast to the upside move with the consolidation. Then they pull back into it, right? So that pullback, I mean, to be honest, this would have been the candle for me, like entry for me, right here. This last big candle. Insufficient price action, bring it over. This is how I get more precise on my shot. See that? Look at that. Look at that. So now what I do is I move my shot there. I'll move this to, like I said, I like to be up under 25 pip. So I'll look like 20, 25 pip shot. I'll take the first shot at 20 pip. Let's do that. 20. Let's just do 25, right? First shot at 25. And I mean, I know I would have taken that shot based off of this insufficient price action here. Okay? Easy call there. Then I just would have I got my shot on the 5 minute, right? Now that I got my shot on the 5 minute, let me go back to the hourly. Now let's take her up to some insufficient price action. Where the first insufficient price action going to be at? Let's look left. Come on, guys. Let's look left. I hope you guys are sticking with me, because I'm just going to keep showing you the same thing over and over again, and it works every time. So now we just take it up. Here's that first insufficient price action here. Boom. Right? First insufficient price action. Then what else do we have? We got double tops here. Right? Easy double tops. We know that that's going to be money. This is money. That's liquidity. They will come get liquidity. Also, with having insufficient price action above it, all of this is letting me know that they're coming for that. They're coming for it, guys. They're coming for it. You just wait on it. All right, so I'm going to continue to look left. All right, everything seems sufficient. All right, all these little wicks right here, this to me is money. Right? That's money too. Right? They coming for all of that in the future. And then this little insufficient price action here on the 1 hour is good too. Bring that over. Boom. Then we'll look at more insufficient price action. So I'm just checking to see what's insufficient. These wicks to me is money. Right? All of this is just money to me. Like these areas here. This is target areas that I know they're going to go and like pick up these areas. All right, so here is that push down. Here's that buy candle here. Oops, I need to lock this thing. All right, all I'm doing is looking left. I ain't even looking at what's going on right now. There's no need, because what your answers are when you look left, you're going to find your answers. So let's do that. Okay. All right. So here I'm going to check for my last buy to sell area with insufficient price action, which we got. They kind of did come back up and play into it, but they didn't do it here. They didn't play back into this area. So I know they got to come back up to this area, these price action, this price points, I mean. All right, so I marked the areas that I see that I want market to come back into. So I'm seeing market still wanting to come up into these areas. Possibly. Might want, I mean, in the future, you better bet your butt that they're coming back for that stuff, right? Because that's just the rule. There's money sitting there, so they're not going to leave the money, guys. They're never going to leave the money. All right. And I also want to thank you guys for those that staying with me this far, listen to me trade the way I'm trading, and hopefully that you guys can see the way that I attack markets versus how everybody else attack markets. So yeah, let's just keep it going, right? All I'm doing, y'all, is write this down. 1, imbalance, checking for imbalance areas, right? 2, waiting on market to do its breaker structure thing, and then it comes back and it will retest, mitigate up out of that area, and then continue in the direction that it's wanting to continue, right? So you just got to be able to catch that. All right, so now that and as you can see, I'm just walking y'all through this because this is what the market makers are coming back into these areas to play. I promise you, I'm gonna lead this up here, and they're going to come back and play in these areas, right? So it's your job to analyze this to the T, y'all. Top-down analysis, and figure out where market is going, right? So here, these got taken because look at this. So we found our entry down here. So we stretched this out. Now we're aiming for all the look left areas. All these areas, look left, insufficient price action on the 1 hour, right? That's a target. Double tops with insufficient price action above. That's another target. Then you got wicks, insufficient price action above. That's a target. Then you got highs. You got highs. So I'm seeing highs now. So I'm going to take these highs. I'm going to take the highs then, right? Maybe even take the next high over here. But I'm going to take this high and I'm going to say, okay, let me look at price action, how it's moving as it's taking these highs. So there's another high that got taken, which was this high over here. This one got taken. So we'll go ahead and, you know, all of these were money, and we'll go ahead and take this one off, and it actually got hit, right? Boom. So that one got hit. This one got hit. This one got hit. They took these bags. So these bags are gone. Those bags are gone, right? Those bags are gone. Now they are doing what? What are they doing? Reversing. How did you know? How do I know that they were reversing? Well, there's a few things that you can do. So one, I already had my 1 hour, you know, I caught what is that, 826 pips on that move. Like, you really would have had to like hold this move out. And I'm telling you, if you hold these moves, you're going to make more money. They're going to fluctuate and do all this crazy stuff, but you think I care with the way that I'm trading? All I'm doing is looking for what I said, imbalance, right? Breaker structure and momentum. And that's it. You know, lots of momentum moving in the direction that I needed to go in, that I see that it's going in. If it doesn't show or present that, then I don't take the trade. I don't believe it. Right? This is not a guessing game. Why? There's no accidents in these markets. They're doing these things purposely, you guys. So if that's the case, then you need to do your top-down analysis this way. This way. If you do it in all these other ways, with all these all extra techie, fancy names, changing characters, and all this other stuff, okay, that's cool and dandy, but I think it's just more confusing. You know, when I think the way that I trade this way is less complicated. I you know, simplified it and made it where, you know, a kid can understand, right? So all you're looking for is, you know, like I just said, the imbalances, you know, the last buy to sell orders, you know, tops and bottoms of the buy and sell to buys. And you can be able to see it because it'll be the last candle, or, you know, that pushed in the up direction, or it pushed up and then it fell, or it's the candle that fell and then pushed up. You know, you're going to be able to find those. You can see them like down here, you guys. Look at this. This is the last candle that pushed down, and then pushed up. Why? And then it gave us imbalance, which means that they were going to feel that imbalance, right? Which they kind of sort of did, right? Left a little bit. You would have seen that on the lower time frame, on the 5-minute, that you could have got in on this entry right here, right? And then also they came back and they mitigated out of this candle here, probably like at an 88% fib level. 78, 88% fib level, you would have been good. Even 50% fib level, you still would have been good, right? Maybe 20 pip of fluctuation, depending on if you got in, you know, what time frame you got in on. So, yeah. So back to what I'm saying, like, you guys, they're bouncing and going from one place to another, right? And I've seen here that all last week, you know, the week before that, past 2 weeks, she has been moving up, right? Moving up, buying. And I seen that, so I was like, okay, I caught the position down here. I actually did catch this position down here, and this is my position that actually, you know, made me reach some brand new goals in trading that I've never reached before. So, you know, and I just want to express to y'all and share with y'all, you know, drop some nuggets for y'all. Hopefully somebody, you know, learned something today from me. Go back and watch this video as many times as you can. I know that it's like an hour long, but sometimes it takes an hour long video for you to sit down and actually see what's going on in these markets. But you need somebody to teach you the right way. You understand what I'm saying? So just know that if you got any questions or whatever, leave your comments. You can, email me at superincomeclass@gmail.com. I am Mo Diesel, so, you can check me out on my social media platforms and all that other good stuff, right? So I'm here to just help you guys learn the right way to trade. A lot of you saying, oh, I'm trading smart money concepts and liquidity, but you're not doing it the right way. I'm catching trades long term and holding it out, and in the end, like, I'm going to win because I'm slow and steady winning the race. You trying to be a panther, right? So I'm seeing, like, for instance, this trade is over with, right? For instance, that trade is over with. What do you think is getting ready to happen? Like, based off of this trade, it hit up here, took out this liquidity, took out, it reached our target. We got 853 pips. What do you think is getting ready to happen now, right? What would I do now? Well, now I'm going to check that last sell to buy buy to sell candle, which is right here. I'm gonna mark that. We're on the hourly. I'm marking that. Okay, this candle. So I'm gonna mark that candle like that. Okay, this is what I'm doing. Where was it? This right here is accumulation area. So I'm looking for, in this area here, for market to, like, accumulate and then break out, to one side. I would say market kind of broke out first. Like, which one broke out first? Well, it broke out to the bottom side first, as you can see right here, right? Maybe trying to entice sellers to come into the market and make them think that they were pushing down. But really, if you look over here in this area on the 1 hour, there was no real reason that you could be like, okay, well, I think we're going down now. I don't have any reason on why market would go down, over here. There's nothing showing in here that's like, oh, market's going down, besides like this little doji candle here. Some people would have tried to play off this doji, right? They probably would have got, negative 10 pips. They probably would have caught, 63 pips and thought they was doing something, right? Maybe even down here, maybe, I don't know. Let's see, right here to here. Yeah, about 60 some pips. All right, cool, whatever. But to me, it's not looking like it should look, right? So I want to know which candle took out the high over here and which one took out all of this area. It was this bad boy, right? So if this is the candle that did it, even took out these highs, this candle, I kind of want to mark that candle on the hourly. Boom. Right? I want to mark this candle. This was that last quick buy to sell with the slippage here. So let me mark this candle for you. Here. Now what I'm looking for, that slippage, right? I'm going to mark this slippage right here. I'm going to drop down in the 5 minute. Matter of fact, I'm going to change the color so you guys can see that. I just changed it to like, where is it? Like a green. Nah, that's too bright. Let's do blue. So I'm going to change it to this blue. Right? I'm going to drop down on the 5 minute. Okay? Just going to keep that same energy. Drop down on the 5 minute. All I'm looking for now is price action to get filled in that area. Right? So I'm looking for that last, there was insufficient price action somewhere. It's more, say, like up here. right? And then this the last buy to sell up there, and then she fell. We haven't came back in that area just yet, but because this was a buy to sell, strong sell candle, this candle would have been the candle I would have chose. So let's narrow it down to this candle here. All right, market comes anywhere up in this area, we're going to shoot her, right? Anywhere up in this area, you know, body, whatever, like, let me get it right. Okay, so we're going to shoot her anywhere in this area. So we're looking for the sales now, because we already see that the momentum has shifted and they have broke the trend on the lower time frame too. So momentum has shifted and we're down now. We got a last buy to sell, right? Imbalance, right? Break of structure, correct? Now we find that order block candle, which was most likely this candle here. Because why? Because we have insufficient price action right here. We had insufficient price action right here. Let's just do it like that. We had it there, and then market came up into it, pushed away, came up into it, pushed away, came down, and then eventually it came back up. Now it came down to take out these lows here, to look left, right? Look left. They took out those lows, right? And shot up. So my shot would only been right here. This would have been my shot right here. So we got 30, like maybe 30 pips on this one. I would have tried to take the high, and now I want to narrow it down. So let me go to 1 minute. Because 30 pips to me, I still believe that I could get a better shot if I look deeper into the market and see what's happening. So they actually consolidated here, and here was a gap. See that gap? And then we got what? We got this candle here. So we marking that whole body of that candle on the 1 minute with insufficient price action behind it, which will give it a, we can move this now to that area. So let's put it, actually we could do it here. Okay. And now let's just narrow it down to, I actually wanted a 20 pip stop, but it seems like I don't need a 20 pip stop. I'm narrowing it down. Look, see, this is how you can like zoom in and get your shot. So really, this shot above this high over here, above this high, shooting off of this order block, because it's the only one that got insufficient price action below it. So this is the order block that I want to shoot off of. I'm going to be in a little bit of drawdown, not even like 2 pip, but let's just say we put it at 15 pip drawdown. Right? Let's get 15 pip drawdown. Now that we found our position, what do? We go back to the 1 hour, right? We going back to the 1 hour. Like I do this all day, every day. Like give me any chart. I'm going to show you guys, you know, how to do this. So now the 1 hour, what are we targeting? Insufficient price action to the look left. So where is it? Where is it? Where's insufficient price action at? All right, so I'm not seeing 1 hour. It's pretty covered, pretty good. So let's go to 2 hour. Let's go to 4 hour. 4 hour. All right, so here it is. 4 hour price action. So we would have aimed for this candle here. So all of that insufficient price action would have got taken. So we would have got it with this candle here. So now we're in it. Now we're in it, and now it's filled. Okay, this whole candle here is filled now. So we could be done, take our 196 pips and keep it moving with the 15 pip stop. You know, it's still a 1 to 12 risk to reward. Or you can just keep it going like, hey, now she got to come down here to this one. And this will give you 379 pip. All right, so I just want to show you guys, you know, this is my way of trading. This is how I, you know, do my trading thing, and how I catch my entries and how I'm able to hold so long. As you can see, look at this. I broke this down for you guys, and look at these long, like this one is a 1 to 62, you know, ratio. Yeah, you would have had to hold it from May up until June. You know, what is that? May 4th to like what, June 23rd, right? But you made so much money in that cash out. Like literally a 1 to 62 is literally 1,324 pips, guys. Okay, so I hope that you learned something from me today. I hope that you you could take something away. I hope you took some notes. You know, a good trader takes notes. I'm going to try to do more videos for you guys and be a little bit more consistent. Like, I think I owe it to you guys. Like, you need to know, like, how to really get these positions. Feel free to hit up my Telegram group. I have a free Telegram group that I do provide signals, free signals, and I have VIP signals. All the information is in the free group. Okay, so you can follow along with me. I will be trading live Monday through Friday from 7 to probably like around 9:30. I don't know, Central Time, a.m. Okay, so make sure you guys, you know, stay up with me. Tune in, set your notifications, hit that like and subscribe to my channel, so this way you don't miss nothing when I am on here giving out this free shmoney, right? I ain't just doing this for my health. No, I actually enjoy doing this though, for real. So, and I like to give back to you guys. So I want to help those that don't understand trading but want to understand trading. But I'm not going to teach you the way that it's on YouTube University or Google or none of that. I'm going to teach you liquidity areas, how the banks trade, how market makers are trading, and what's the psychology behind it. And this way you can understand that, and you'll grab the theory, and you'll be able to profit more on your trades. Okay. And you won't be getting psyched out on those lower time frames, because all I did was use the higher time frame. You know, top down analysis, and then I stayed going back 1 minute, 5 minute entries. 1 hour, 5 minute entries, right? Analysis on the 4 hour, 1 hour, finding insufficient price actions, bouncing in between that, you know, refining my order blocks and my insufficient price action areas. That's pretty much it, guys. All right. So again, thank you guys for coming to my channel and sitting through this lesson. I'm going to start giving you guys more and more lessons, and I'm going to trade live with you guys. I don't know about anybody else and what they're doing. I'm just only focused on my bag and what I'm doing and trying to help out the community. So if you liked the information that I gave out today, please give me a thumbs up, send me a comment or whatever. If there's something that you feel like I missed out on, I can definitely go in depth with that with you. But this is just really the way that I do things. Like, I don't have to have indicators on my chart. I am all eyes and price action, and that's it. Insufficient price actions. you know. So make sure, again, you guys, watch this video as many times as it takes. This is actually this trade here. I'm still in this trade. Actually, I'm in this trade at this purple right here, purple line. So here, and I'm still holding from last week, and I am still like I said, I'm still in profit, and I'm going to hold her until she comes back down here, right? So we're almost like we're actually over halfway there, just about a little over halfway, but we're getting there. And if price changes or does anything, I will update you guys and let you know. If you're in my Telegram group, you will have the signals and you will get the updates on everything live and in real time. So you don't want to miss out. So make sure at the bottom you check in the description for the link. Okay. Again, I appreciate you guys for coming by and listening to me talk to you and break this down for you about what I believe the mitigation areas are in these markets. And so I hope you guys have a good one, and stay tuned for the next video.